Good morning, everybody. Mike Vacchi here for Princeton Trader with your Tuesday morning pre-market webcast. Okay, uh, yesterday, big down day. Uh, it's the kind of big red candle that people have been looking for so long, and they got it yesterday. But the question is now, what do we do with it? Couple things. You've had a pretty quick reversal here. You've done essentially 50 handles in about 4 sessions. So in the very short term, we are overdone, and that to the downside. And that is reflected in the punch of the lower band. Okay, punched the lower band, came down, did not break the 50-day exponential moving average. So I'm still swing short. I'm left with really not much but a couple of runner positions. I covered a lot yesterday. So, all that waiting worked out. It's still the most painful trade in the world, every time I do it. But this is why you do it, because everything reverses. One of a few things will happen. Oh, let's talk. When we talked yesterday, I said one of three things was going to happen: lower high, double top, higher high. So we got the lower high, and it makes this daily chart look pretty ugly. So now you've got three doors. Door number one is we go up to the middle band and we break through. Door number two is we go up to the middle band and it becomes resistance. Door number three is we ride the lower Bollinger Band, kind of like we rode the upper Bollinger Band for the last 2 or 3 months. The problem with the ride the lower Bollinger Band argument is, you still have the Fed to deal with. They have a plan. They're executing the plan, and that plan tends to bring fresh money into the market fairly consistently. And it's very hard to ride the Bollinger Band, the lower band, when that's happening. That's much more conducive to riding the upper band. Running up from here to the middle band and breaking out is possible, but it would really have to be news driven, kind of like the gap here on the fiscal cliff deal. Okay, you'd really have to see some news here. I don't know where that would be, except for the sequester. If they can make a deal on the sequester, they've got 3 days left. So the political economic calendar is not completely devoid of anything that could make that happen. But what I think is most likely to happen is that we go up to the middle Bollinger Band, up around the 1507, 1508 level, and that proves to be resistance. So if you're long now, if you did come in long and buy that punch yesterday, that would be my target area for you, 1508. Take profits along the way. You should already be with at least an even stop and have already taken some profits, as we are 10 handles off of yesterday's lows. But if you're looking for a longer term target, that 1507, 1508 would be the area for me. So Bernanke speaks before Congress today. It'll be interesting to see how that plays out. We've got the second look at GDP tomorrow, or on Thursday rather, durable goods tomorrow. Today we've got new home sales and consumer confidence, Case-Shiller as well. So there's a few economic points, but I think the focus is going to be pretty squarely on Bernanke, as it should be. So use stops and be hedged. If at this point you're getting super excited to short this market because we had a big red candle yesterday, don't. Just give it a minute, okay? You can sell rallies in here, but you need a rally to sell. Is 10 handles off of the closing low in the overnight enough of a rally to sell? Maybe, but I think you'll probably get a little better look in RTH during the regular session at a little higher area to sell, a couple areas to look at. You've got daily and 3-day pivots at 1497. You've got the 9 and 20s coming in at 1498.83. So you've got this 2-handle 97 to 99 quadruple pivot zone. I would expect it to trade up into that area. I would expect that area, at least on the first look, to be resistance. If you want to sell a rally from there. Okay, Mike Vacchi for Princeton Trader. Everybody have a fantastic day. I will see everybody tomorrow morning with another webcast. Trade them well.